Stock investing for beginners. Palantir stock jump. Today we're going to look at stocks that reported earnings last week, including Palantir. And we're going to look at 6 stocks that are going to report earnings next week and which stocks are good. I'm going to analyze them and I'm going to give you my professional opinions if these stocks are great stocks or not. And I made over 2,370 in one day on February 2nd. And I'm going to look at February 1st to February 9th, 7 days. So 1 week, how much did I make? I made over 5,000 total gain. Short-term gains, 8,600 in just 1 week. And of course, I took some losses on long-term gains because I'm preparing for the market pullback and correction in March. Like I said in my previous video online, if you have any questions, comment down below and I'm going to answer great questions in my next video or at the end of this video. So I took some losses, Chinese ETFs, so they were not doing well, and I believe that long term it's gonna be in stocks. So I prefer to invest in stocks, not ETF anymore. ETF is good for people who don't know how to choose stocks. If you know how to choose stocks, you should not be buying ETF. I don't buy ETF. Of course, it's up to you to decide, make decisions. So I got rid of some of the ETFs, raised some cash, so that when the market consolidates or pull back in March or April, I will have enough cash to use those. But even if I took some losses, I still made over 5,000 in 1 week. That's the power of stock investing, call option, put options, and advanced option. These 4, especially the advanced option. And let's look at S&P 500. S&P 500 was up 0.57% last Friday. Over the past 5 days, it was up 1.4%. Year to date, it's up 5.9%. 5 years is up 81.1%. Remember this number. When you are looking at the stock, the first thing I usually see is if this stock beats S&P 500 over the past 5 years. If it beats over the past 5 years, yes, I can continue looking at that stock. If not, I don't even look at that stock anymore. Nasdaq, it was up 1.25% last Friday. 5 days, it was up 2.41%. Like I said before, it's a bull market. Any dips, people were so afraid to lose out. So FOMO, fear of missing out. So they kept buying. Year to date, it was up 8.29%. And 5 years, it's up more than 114%. Of course, Nasdaq is usually performs better than S&P 500. Dow Jones, it was down. 5 days, it was up 0.32%. And year to date, it's only up 2.54%. And 5 years, it's up 48.56%. Usually, Dow Jones is the worst performing indices among the 3. Let's look at the last week stocks that reported earnings. Caterpillar, it was down 5.04%. Initially, it was up because their earnings was really good. Everything was so good, and then after that, it took a dive. And I believe it's going to perform pretty well this year because of infrastructure investment paid by President Joe Biden. And the past 5 years, it was up 132.86%. So it beats S&P 500. Do I like this business? Yes or no? It's neutral. Like I said before, it's okay for me not to own this stock. As an investor, you need to make your own decision. And let's look at the next stock. Tyson, it was down the last 5 days, 13.3%. Year to date, it's down 5.31%. 5 years, it's down 16.02%. Like I said before, if this stock doesn't pass my 5 years criteria, if it doesn't beat S&P 500, I don't even look at the other criteria. I have 5 criteria, as I usually say in every one of my videos. And so I'm not going to look at it. Palantir, it was at 38.84%. The past 5 days. That's so good. That's so good. Year to date is up 47.04%. 5 years, 5 years, it beats S&P 500 165%. Like I said before, this company, if you know that if I know that this passed my first criteria, the second criteria will be to look at if this business has been in existence for more than 10 years since May 6, 2003. Yes, so it passed my second criteria. The third criteria, has it been a public company for at least 5 years? No, it does not pass my fifth criteria. So it's only been a public company for about 3.5 years. So about 4 years. So I would say I could put some a little bit of portion of my portfolio to this stock because it's not 5 years yet. The fourth criteria is, do I like business? Yes, I like this business. It's AI companies and lots of customers are governments, and governments is usually very sticky. Once they choose you as their vendor, their supplier, they keep buying from you. And Palantir, they have been doing really well getting commercial customers. That's really good. That's diversification. This is their first year of profitability. So they could be in the S&P 500 pretty soon. So I see a lot of potential. In that situation, I can make exception. Hey, you know what? I can add this stock a little bit. I can look at their balance sheet, financial statement. Yes, they don't have so much debt. So that's something that I can add it. So yeah, Palantir, I traded Palantir with options and advanced option. On February 6th, I made over 1,900. But if I want to know how much I made only from Palantir, I can look at PATR. Then it shows me 1,553. So pretty good. It's one day I made over 1,500 because of Palantir. So if you know how to trade Palantir, you can go and check my playlist, YouTube playlist, how to videos. But I'm going to show you generally overview. Look for Palantir stock in your stock broker account or option broker account. Click on trade Palantir options. You can choose any expiry date. If you believe that Palantir could go up, and maybe say in April, until April, the longer is expiry date, you need to pay higher premium. But one good thing about the longer expiration date is your call option doesn't lose value so much. If you believe that Palantir could be $27 stock by the end of April 19, you can choose 28 or 28 strike price or 27. If you believe that it could reach 28 stocks or $27 stock, you can choose this price. Or if you are not so sure, there could be some correction pullback. Palantir, in my opinion, is an overvalued right now. So if you believe that it could possibly pull back, you might not want to add Palantir as a call option right now. Just wait for a little bit. But if you are not so confident, you can choose a lower strike price, higher premium. Okay, 23 or maybe 21, $4.45. You can pay $445 to own one call option. One call option represents 100 shares. So you do not need to pay, $2,400 to own 100 shares. You can only pay, say, $400 to represent 100 shares. Let's look at the next of interest. It was down 7.73%. The last 5 years, it did not beat S&P 500, so I don't even need to look at more as an investment. Eli Lilly, the past 5 days, 6.89%. It was up. And year to date, it's up 25%. 5 years, it's up 504%. Like I said before, if you look at all these 5 criteria, even if you don't know so much about this company, let's say I like Eli Lilly, so it's already up 504%. I'm just gonna buy. And you may not know this company very much, but you could still make more money. Why? Because you are buying great companies. Like I said before, if you learn from a great master, a great coach, teacher, your rate of success is higher than learning from other teachers, other mentors, other master. So it's really important where you follow. If you always keep learning about stock investing, option trading, advanced option, your chance of succeeding, being able to travel around the world like me, is higher than just a normal person, just an average person. So it's just probability, the game of probability. Remember, Alibaba, like I said before, it was down 0.21% the past 5 days. 5 years, the past 5 years is down. So I don't invest in Alibaba anymore. I used to invest in Alibaba when it was going up. When I look at the past 5 years trend, it was going up. So it was a great company at the time. Now it's still a good company, but because of China policy, it's so unpredictable. So investors do not like Chinese stock. So that's why they don't buy Alibaba stock. So that's why I tend to stay away from Chinese stock. I don't even trade Alibaba anymore. Next one, Wind Resort. Wind Resort is up 9.84%. Great, maybe good earnings. And the past 5 years is down 50.19%. So I don't want to buy Wind Resort as an investment because it did not beat S&P 500. Uber, 3.85% the past 5 days because good earnings. They could be in S&P 500 pretty soon. The past 5 years, it did not beat S&P 500. So no, I'm not gonna buy Uber. I could trade, not buy Uber. So let's look at next week what could happen. There could be core CPI report coming. If CPI is better than expected, the stock market could keep going up. That's why now good news becomes good news. You see, every time the stock market wants to go down, there's some good news that's gonna keep propping up the stock market. And lots of people, they get FOMO. So every time the stock market goes down, they did buy. So that's why it's very hard for the stock market to go down during the bull market. And especially the bull market just started maybe 2 years ago, October 2022. Now 2023 was second best year to buy stocks. And this year is the third best time to buy stock. We are still in time. You are still in time if you miss out. And there will be some initial jobless claims, just usual, nothing special. Every week is almost the same. Core PPI, yes. Housing stock, building permits. I think they just report once a month. So how many real estate, how many houses are in inventory, and they're gonna see building permits. How many construction company apply for building permits to build houses? If it's more, so that means housing supply is good. Supply is good, but potentially because of the demand. If the demand is not good, supply is not gonna be good. Of course, there's always a lag time between these two. Let's look at next week earnings. Airbnb, the past 5 years, is only up 5.9%. So no, I'm not gonna invest in Airbnb. I believe it's still overvalued, but I could use advanced option to trade Airbnb. It has not been a public company for more than 5 years. So no, it's only a trading stock, Airbnb. And next one, gonna be MGM. MGM International Casino Resort. So the past 5 years, 65.69%. It doesn't beat S&P 500, so I'm not interested. If they invite me to stay at their hotel, their resort, I'm gonna stay at their resort. I'm not gonna play casino because I know that casino they usually win. That's how they make money. They do not make money from the rooms. They make most of their money from their casino winning. So don't play casino. Remember. Next one is Martin Marietta. It's a industrial company. They manufacture trucks, things like this, construction, vehicles, heavy machineries, and now infrastructure based. America is going to build back better the infrastructure, so that these companies are in demand. Caterpillar, Martin Marietta. So I would not be surprised if they are performing pretty well for next few years, but they tend to be cyclical. And let's look at their stock. Their stock is pretty good. Its stock is good, 177.25% the past 5 years, but they tend to be cyclical. So it's still in time to buy into this stock. They may probably have 1 or 2 more years of life, but after that they could go down. So I do not like this type of business, so I'm not gonna buy. But of course, this is a great company. Let's look at the past 5 years for that. The next one, Applied Materials. Applied Materials is pretty good. The past 5 years is up 375.29%. Very, very good. And it has been in business for a long time, public company for a long time. They made semiconductor machine. Look at this, all these. So I own Applied Materials stock. And so if you work in this profession industry and you know this is a great company, you know, you have inside information. That's how you find great stock. If you have inside information, then you should be buying stock. If you know that this is a great company, do not miss out on great companies. If you are working in a company for a long time and you do not buy that stock, hey, if you miss it, you are destined to be employed for the rest of your life. Do you want to work as an employee for the rest of your life, or do you want financial freedom, time freedom, or location freedom? So it's up to you to decide. So yeah, let's look at the next one. DDD stock. Trade desk. The past 5 years is up 351%. And year to date, it's up only 1.02%. Yeah. So has it been a public company for 10 years, 5 years? Yes. It has been in business for 10 years. Yes. Do I like this business? I would say okay. Yeah, I used to own this stock, but then I realized that this company may not be as good as the rest of my other stocks that I have, and I cannot see how well they will do in future, in the next 5 years, 6 years, 7 years. So I cannot see that. So I sold the stocks already, but I still trade this stock using options, advanced options. And all these stocks, like I said before, you already know which stocks I like. You know, based on the chart, I like AMAT, but I'm not gonna buy because it's not a business that I really like. And yet, Applied Materials, yes, I like the business. AI, they make semiconductor machine that companies use to manufacture their chips. So they also pay dividends, not so much, but it's okay. It's fairly valued. It might be a bit overvalued. Their earnings can come in next week. So I don't usually buy stocks during earnings. So I already own stocks. So no, I may trade using advanced option. Advanced option is good, even if the stock going up, going sideways, not doing anything, going down, I can still make profits. So I will use advanced option to trade AMAT. Yeah, if you want to learn more, you can go and check out my channel and Master Rich Stocks Option Crypto, and go to live. I talk about it, stock markets, prediction, forecast, every week, every time possible. And yeah, subscribe, share. I will see you